Hey everybody, John and Broadbent here, your host of UnWoke.Academy. Welcome to another episode. We are now live streaming on Facebook, YouTube, X, and Rumble. If you're on one of those platforms that allows you to add a comment, feel free to add that comment, thought, or question, and I will try to incorporate that into today's show. The first thing I'm going to do is point out today's props. I brought along some recognizable things to discuss. To those of you who may participate in junk foods, you might recognize some of these. I've blanked out the brand names because we're going to be discussing these today. But first, UnWoke.Academy, for anybody who's not familiar with us, we are where the freedom economy meets follow the money. I'm ex-Wall Street and make a point of bringing out the woke on Wall Street, the far left political influence on Wall Street and where it doesn't belong. So yes, I'm going to be using food as an analogy today. Bear with me, it'll make sense in the long run. I will start off by saying I'm one of those people that I believe that there is no such thing as an unhealthy food. There's an unhealthy diet. And in the world of finance, big finance, where I come from, and especially in the institutional world, there is definitely an unhealthy diet. There are a lot of people out there that make a lot of money off of promoting products and services that are unhealthy. So one of the coolest trends, if you're on social media and browse like I do, you can hear the crinkling of the bag. It is tempting, isn't it? One of the coolest trends that I've seen on social media is people talking about health and nutrition. And I think it's probably the algorithm. I started some time ago, probably about 5 or 6 years ago, paying more attention to the foods that I eat. And I ended up getting into growing some of my own things and looking for organic and non-GMO and those sorts of things. And I feel better for it. There's a little bit of a learning curve. And I went from just buying whatever was kind of flashy and crinkly on the grocery store shelves to educating myself and making informed decisions about the foods that I choose to eat. I will tell you candidly, yesterday I had donuts and drink, I actually like root beer and ginger ale. I do drink and eat unhealthy things, but in moderation. What that means for me is an informed learning curve. And I started some years ago, and now it's just become sort of second nature. But one of the things that you see often in social media are people that pick up, and you see it often actually in grocery stores. And I'm actually kind of a little bit jealous because it's an easier sort of discussion to have than what's happening in your financial life, but you'll see the parallels in just a moment. You see people pick up bags like this and read from the back: vegetable oil, corn, canola oil, soybean and or sunflower oil, corn maltodextrin, um, cheese cultures, salt enzymes, salt whey, monosodium glutamate, Romano cheese, and then it sort of gets on from there. Some of these are really hard to pronounce. Disodium inosinate and disodium guanylate. That's just one. And I do actually pay attention to these. I'll still eat some of these. I mean, clearly, I bought these and I'll share them around. I just eat them, as I said, in moderation. And we have these snacks that may look familiar to you with a little colorful um, shell around them. This one we get into um, lactose, milk fat, soy lecithin, natural flavors, dextrin, colors including blue one. What is lake? Blue one lake? I've heard of blue one, but not blue one lake. Yellow 6, red 40, yellow 5, etc. So you can go on. I actually ended up picking up a whole bunch of these different packages. These are tasty snacks and they're appealing and they're really compelling and interesting to people when you go into your average typical grocery store. But here's the thing that a lot of people may not notice or pay attention to. And for me, it's kind of become second nature because I've spent so many decades in and around and focused on the world of finance and money and business and profitability. These sorts of things are way more profitable than your organic pound of grass-fed beef or whatever. You may not think it, and you may look at that pound of beef that is all natural, organic, grass-fed, etc., whatever, um, or your free range eggs or whatever, and think to yourself, boy, that's really expensive. And that can be a focus. But as far as the profit margin, I make the argument, I firmly believe that the profit on things like this is way higher. So you go into these dollar stores and your corner gas station that doubles as sort of selling foodstuffs. I have to air quote that, and these highly processed sorts of junk foods, that's where the profit is. The same virtually identical environment exists in the world of finance. There are people, and there are a lot of them in the world of finance, who are perfectly happy to sort of rubber stamp and sell whatever it is to whomever will listen. And the more people you can get into financial service firm X, Wall Street type of firm, and the more stuff you can sell them, the more profit you can make. Well, the purpose of UnWoke.Academy and eventually the financial PMA that came out of it is to talk about what's actually in it. And when you get into lifting the hood, and I refer back to a couple of episodes that we've done, I would pay particular attention to Parade of Woke Sameness and the globalist bubble, where we talk about how mutual funds and a lot of other types of pooled investments have successfully corralled lots of people, a very large majority of people, I believe, especially people who are in things like 401k plans, IRAs, etc., into virtually the same very small number of investments. So what do I mean by that? In case, and there's a little bit to unpack here, bear with me, because this is really important. You're paying for these things. You should know what you're paying, what you're getting, and what the health implications are. And in this context, the health implications are your financial well-being in your future, but also in the realm of discussing woke versus unwoke, the future of our nation and Western civilization. There are, and hopefully, if you're listening to this program, you're already convinced or on some level aware that we have outside forces pushing very hard to quash Western civilization. That means capitalism, free market economy, and move society, global society, all of us, into sort of a global communism, global social Marxist realm. I know that's a lot to unpack. It's a lot to digest here, pun intended, I think, for the moment. But just hear me out as I describe the circumstances and the environment. And yes, a lot of this kind of builds on previous episodes where I've talked about the outside pressures exerted on companies, making them go woke, quote unquote. There's something called the Corporate Equity Index. If you're not familiar with it, you should be. That is kind of the stick and the carrot that's used to make companies adopt far left woke sorts of policies, like diversity, equity, and inclusion, and things like it, and adopting the climate change agenda. Uh, those kinds of things are unhealthy. And what they've led to is an environment where only a very small number of companies check all the boxes. They're okay in the new politically correct realm, and they check the boxes of diversity, equity, and inclusion, and uh, sustainability, climate agenda, etc. And that small number of companies are receiving the overwhelming lion's share of the focus from Wall Street and global banks. That's where things like mutual funds come in. So, in the past, when you would invest in mutual funds, if you were given, let's say, a sign up sheet for your company 401k plan, you would look at a list of different mutual funds and pick a few that look like they would suit your needs. They were uh, well suited to your objectives. And you might have a global investment mutual fund, or one in large companies and one in small, et cetera, and check a few boxes and allocate some money. And then every time you get a payroll, a little bit of your money goes into those mutual funds. Well, it's important to know what's under the hood at that mutual fund. The first thing to know is the mutual fund itself is not an investment. Mutual funds are you giving authorization to somebody else to manage your money. And they'll decide how it gets invested and in what companies. That's an important distinction that I think not everybody understands. When you're investing in a mutual fund, you are giving them both authorization to buy and sell different companies. And in most cases, you're giving authorization to another outside firm to vote on your behalf. Those are called proxy votes. I did a few episodes on that as well. So when you wonder why these companies end up with boards that are very far left leaning, very sort of Marxist in their stance and positions, it's because the companies that have the decision making authority to vote on your behalf overwhelmingly, not universally, but overwhelmingly, have steered corporate leadership into the far left. Oh, that's a bad scenario. And when you get an environment where only a small number of companies check all those boxes, the mutual funds, what they've done over the past around 5+ years, is they've migrated out of selecting good, healthy, verifiable, quantifiable investments for you on your behalf. And overwhelmingly, we find that mutual funds have migrated into investing in a very small number of companies. I keep calling it sort of eight-ish. There are eight mega globalist companies that they have just sucked up the oxygen in the room. They are pulling in vast amounts of money inappropriately, and they're overfunded, dramatically overfunded. And what that's meant is that smaller companies, and in this analogy, using food again as the analogy, it's it's easy sales. So when you get into Wall Street and kind of what happens behind the scenes, Wall Street typically, when you get money managers, people who manage things like mutual funds, sometimes referred to as portfolio managers, their job has been forever to go out and look for the healthiest, best things. And if they suddenly discover someday that what they thought was healthy and appropriate to put into your diet, in this case, your mutual fund, suddenly they realize it's unhealthy, they should and historically have had the ability to withdraw that money. They will draw down, get out of that, and get into something better. Well, that takes money and it takes thought, it takes research, it takes courage. And right now, most mutual funds, and I'm going to pause and tell you why I say most mutual funds. Over the past few years, I've actually put out a request for information to money managers and asked them to either explain their justification if they are adopting these woke standards and putting money into far left companies, explain to me and to the world in quantifiable, verifiable terms what their metrics are, what their measurements are, or explain to us that they're not using those woke standards. And I've gotten exactly zero formal responses. I've had a number of conversations with money managers who've told me that they may not like it, but they're sort of forced to by corporate and they have leadership that's dictating these sorts of things. I get that off the record. But ultimately, what that tells me is that we don't have very many companies out there managing money on your behalf that are willing to use tried and true traditional standards for what is healthy versus unhealthy. That's not an okay environment. I have had some conversations with people that I do recommend are encouraging, and you should be encouraged to look at them. At least consider them for part of your portfolio. We've had Justin Bernier from National Security Index, who has put together a portfolio of international investments that eliminates and consistently evaluates any exposure to the growth and expansion of the Chinese Communist Party. And yes, that is an issue. You should go back and watch that episode. It's, I think, around May of 2024. We focused, Justin Bernier and I, on the realization that some managers were diverting money through offshore managers and into the Chinese Communist Party and the growth and expansion of their military. That's not an okay thing. We should be very leery of that and not allowing our money to go in, get invested in those sorts of things. And in this analogy, that's like, think of it like junk food. It's the quick and easy. People love to sell that stuff. They will put it into your portfolio, make huge profit off of it, um, and they don't have to do a lot of work. Profit margins are very high. They can have very little staffing, and ultimately, you end up unhealthy and paying the price for it. You should not want that. Most people don't. When we get into the conversations about woke versus unwoke, and heck, the proof's in the pudding. If you go on any social media, I recommend checking X and look for Go Woke, Go Broke. Many of those companies have just gotten really beat up, and their social media presence and their um, sales and profits are significantly down. Just to use one example, Target, I think at one point when they were wheeling out far left, these onesies for children that had to do with the LGBTQ plus, and I think they had satanic symbols or whatever they were. Almost overnight, they lost about 13 or 14 billion dollars in market capitalization. Their share price dropped. Well, that's a good thing, But let's take it a step further and take a look at your portfolio. The purpose of the financial PMA, which was born out of the research that we do at UnWoke.Academy, is to put together investment portfolios and share with the world the research that we do, helping people to invest wisely and not be woke. Don't fund the woke companies, or as we like to say, diss the globalist left. That stands for know where you donate, invest, or spend your money. By way of example, we do have, and I have some notes here. I still have the notes that I shared last week. I'll make a point a little bit later this week of updating these figures. We'll see where we stand. Keeping a track on one of the members of our financial PMA, there's a woman that started doing trading. I actually personally helped her on October 7th and October 8th of 2024. And through June 16th, her unrealized gain in the portfolio was 38.54%. That's a very significant gain. And so what we're seeing is exactly the opposite of what Wall Street wants to sell you. They want to sell you in the cheap, the how do I want to put this? They want to sell you on the mutual fund that's virtually identical to all the other mutual funds and funnels your money into a very small number of companies that check all those woke boxes. Well, those aren't doing very well. If you look at the market indexes and where they're invested and their stock prices, and candidly, I make the argument that they're artificially propped up and I think that many of them have to adjust down significantly because they're dramatically overpriced. But even there, they're sort of flat. So for that 8-ish month span, it's about 8 months, a little bit over, where we're seeing investment in real tangible companies. And I've shared with you before in previous episodes the list that that particular woman is invested in. And those are real companies. You don't have to guess in the PMA or when you build your own portfolio and build a stock portfolio. By the way, what she's done represents a, a significant savings to the average investor because she has no advisory fees that she pays and she has no investment management fees. It's just one time she pays very low trading costs. Those are not my costs, by the way. Anybody can trade anywhere on any platform. I recommend looking at discount trading platforms. They're very inexpensive. They're a great place to build a portfolio. And ultimately, she paid a fraction of the price, and that's it. Going forward, she may have, depending on the type of account, she may actually have an annual maintenance fee. Some of these platforms charge it. It's usually, I want to say, around $125 or something. But I know a lot of investors who have investment management fees that they pay to mutual funds. Let's call that 0.5%, and they pay advisory fees. And all in, they might be paying $7,000 or $8,000 per year. And that's actually a live example. We did an analysis of somebody's, we gave them a pseudonym to protect their identity, but we called that person, that family, Yosemite Sam. Go back and take a look at that. So Yosemite Sam was paying a lot of money for virtually the same thing almost everybody gets almost everywhere in your 401k, your IRA, etc. And that's where that sales mentality comes in, and it's unfortunate and it's inappropriate. Just like, and yes, I'm going to use another analogy and combine them now. Just as we saw during COVID with doctors who were willing to set aside their logic and reason and their due diligence process and their curiosity and no longer wonder about what they were injecting into their patients and simply follow orders from mega hospital, from corporate structures, and inject whatever, and just simply believe that rote scripture of don't ask questions, just inject as much as you can. And then you have people out there who rolled up their sleeves and they got, I don't even know what we got up to, 7 or 8 different jabs That was all experimental and it was hugely profitable. Well, the same thing holds true for junk foods. And the same thing holds true in the world of finance. I can't possibly overstate this. There is actual work to be done. And for some people, I've mentioned paying financial advisory fees. It can be very beneficial and it can be very worthwhile if you get a decent, intelligent, competent, worthwhile financial advisor. I recommend at least talking to Matt and Drew. We have a relationship that we've set up with Matt and Drew at Inspire Advisors. They have a metric that they use that's not woke, that I think you'll enjoy, or find somebody like them. But what we've ended up with is an environment, pardon me, is an environment where a lot of people have been defaulted into that corner quick mart, they discount junk food and are ending up with a terribly unhealthy diet. And I think where that's going to get us, and I do get the question quite often, if I'm predicting a major market pullback in sort of what people think of as the market, S&P 500, the NASDAQ, Dow Jones Industrial Average, some of those indexes, and I do, I anticipate that a likely time for that would be in the lead up to next year's midterm elections, because there's political gain to be had if what people think of as the markets drop just prior to the elections. I think they'll hang it on Trump and the Republican Party and try to use that to get away with lots more, whatever you want to call the Democrat Party candidates. I'll bite my tongue there. On social media, sometimes I make some comments about the current state of the Democrat Party, but that's what I anticipate as far as timing. Why be part of that? Why would anyone want to be part of that? It's unhealthy. It's damaging. It's harmful. It's counterproductive, and it's perfectly avoidable. And using this example of one of the women who joined the financial PMA, we're seeing tremendous opportunity right now in companies that have been cash starved for 5+ years. Let's fund those companies. Let's put America first. Let's make America great again and focus on funding those companies that have not received funding or very little of it over the past 5+ years, because virtually all the money, mutual funds, exchange traded funds, collective investment trusts, unit investment trusts, index funds, so much money has been artificially funneled into a very small number of overfunded companies. That is a terribly unhealthy environment. That's what the PMA is all about. By the way, if you are interested in the financial PMA, well, even if you're not interested, I still suggest going and checking out the website, share it with people you know, because one of two things. I'm hoping that more people see it, it resonates, and they become members. We'd love to have you. Or if you don't like what we're doing or have access to another outlet for a financial PMA, share it with people you know and ask them to duplicate the work that we're doing at the financial PMA. Take our research, take all the things that we're doing and run with it wherever you are. If you join the financial PMA, I set the price point for that at $1,000. That $1,000, the first thing I would suggest anybody and everybody figure out what you're currently paying. You are paying if you're investing in IRA, brokerage accounts, 401k, etc. All of those have costs. They're just not transparent about it. I would suggest figuring out what those are. There are some episodes that I go through talking about adding self-directed brokerage accounts to shave off or completely eliminate as much of and as many of those different payment sources and the people siphoning money out of your investment accounts. And what I suggest to people is think of it very differently. And that's why financial PMA is a very different type of answer. If you are, and you can cancel at any time after year one, if you are in the financial PMA, what I suggest is just make that a direct recurring payment, just like any other form of a private membership association. PMAs, by the way, if you're not familiar, do a little bit of research. They've been around for a long time. I believe we're the first people to apply it in the financial world. And I think that we're still the first financial PMA out there, and maybe only, which is unfortunate. I think a lot more people should adopt that and switch from that Wall Street type of sales environment back to focusing on helping the individual and focusing on Western values and free market economy, and talking about things like, using that analogy, what are the actual ingredients? Not just fund X is super easy to sell because you can tell people that it's eco or green or has diversity, and sustainability or whatever. Those are just catchphrases to distract and and collect egregious amounts of overfunding. Better to find an environment, PMA or otherwise, where you have caring people who are going to look and spend the time and do the research and tell you what's really happening and be transparent about the fees that are associated with that. So, don't forget to like this video, no like and share Financial PMA and the UnWoke.Academy, the research that we do. Let's get the message out there. The more people we get talking, the better off we are, because we can then defund the woke. It's a big part of where the problem comes from. A lot of people focused over the last year-ish on things like USAID. Actually, that's been much less than a year. Um, and it's true that we have some non-governmental organizations and nonprofits that are capturing taxpayer dollars and using them against the West and against American values and our free market economy. But that's not the only source of funding for these bad things. Another source shows up in your mailbox probably about once a quarter in the form of your 401k statement. Let's reverse that. Get the money out of those far left companies, causes, and countries, and instead fund American enterprise. That's the mission. That's the objective. This has been another episode of Financial PMA Focus on UnWoke.Academy. The plan is to go live every Wednesday at noon with this discussion. If you come back next Wednesday, I hope you'll bring some questions with you and bring a few friends. Don't forget to click that like button. Thanks, everybody.